You know the pitch, right? That financial product that claims to do it all. It's supposed to be this amazing investment for growth and a rock-solid insurance policy for protection, all rolled into one neat little package. It sounds convenient for sure, but today we're going to pull back the curtain and see why that all-in-one approach might actually be costing you big time. And this quote right here, it just hits the nail on the head. Think about it. A Swiss Army knife it's handy, right? But you're not going to use that tiny little saw to build a deck, and you're definitely not using that screwdriver for a major engine repair. Well, these blended financial products are exactly the same. They try to do a lot, but none of the tools are as good as a dedicated one designed for a specific job. So, what are we really talking about here? We're talking about things like variable annuities with a bunch of complex add-ons, or those indexed universal life insurance policies they sell as retirement accounts. And the basic problem is, they're trying to do two totally opposite things: grow your money and protect your money. When you mash those together, you can end up with the worst of both worlds. And that really leads to the biggest question of all. What are you giving up for that so-called convenience? Because with these products, the real costs are almost always buried deep in the fine print. So let's dig into the three biggest problems together: those hidden fees, the limits on your growth, and a real lack of flexibility. Okay, first up, let's talk fees. These blended products are absolutely notorious for layering costs on top of costs. I mean, you could be paying for insurance charges, extra fees for those income riders, crazy high surrender charges if you want your own money back early, plus management fees on the investments inside. All of these just stack up and can silently eat away at your returns year after year. Second, these products often put a hard ceiling on how much your money can actually grow. So even if they're tied to something like the S&P 500, they come with some serious restrictions. They might cap your return at, say, 8%, or only give you a fraction of what the market actually did. So when the market is soaring, your money's left behind, missing out on all that potential growth. And finally, what if you just need to get to your money? This is where that inflexibility really hurts. These products often lock your funds up for years with massive surrender charges. Trying to get money out early could mean you lose a valuable benefit or you have to pay a huge penalty. The bottom line is, your money just isn't as accessible as you think it is. So, if the all-in-one Swiss Army knife is so flawed, what's the alternative? Well, the smarter path is to separate and conquer. Instead of cramming everything into one complicated product, you build what we like to call a professional's toolkit, using different specialized accounts that work together in your financial plan. Let's just compare these two approaches side by side. On one side, you've got that complicated, blended approach with its high costs, capped returns, and inflexibility. And on the other, you've got the professional's toolkit, where each tool has a specific job. This separate approach is just more transparent, it's more cost-effective, and at the end of the day, it gives you way more control. So how do you actually build this toolkit? It all starts with a very simple rule. Give one specific job to each financial tool. You wouldn't ask your hammer to be a saw, right? So you shouldn't ask your investment account to also be an insurance contract. It's all about using the right tool for the job to get the best results. Now check this out. This table shows you exactly how this strategy works in real life. Let's take retirement income. The blended way might use a variable annuity with high fees. The separate way? You'd use a specialized insurance contract, like a fixed index annuity, just for guaranteed income, and then combine that with an IRA or brokerage account for pure growth. For tax-free money, instead of a complex life insurance policy, you could use a Roth IRA and a simple, cheap term life policy. See? In pretty much every case, the separate tools just deliver better results for less money. Building your own toolkit really boils down to understanding three core jobs your money needs to do for you. First, creating lifetime income. Second, growing your wealth. And third, protecting you against risks. If you find the right tool for each of these three jobs, you create a powerful, coordinated plan. Let's break each one down. Okay, for job number one, creating a reliable paycheck for life in retirement. The specialized tool here is a fixed index annuity, or FIA, with what's called a guaranteed lifetime withdrawal benefit. Its sole purpose is to give you a protected stream of income you can never outlive. It shields that specific chunk of your money from market crashes. Now for job number two, growing your wealth. For this, you just turn to pure investment accounts. Think about your IRA, your 401k, or a standard brokerage account. These tools are built for one thing and one thing only: growth. You can align them with your risk tolerance, keep the fees super low, and get full access to the market's potential without all those caps and restrictions. And that brings us to job number 3, protection. For this, you use pure insurance contracts. A simple term life policy is a super cost-effective way to protect your family's income. An insurance policy that's dedicated only to long-term care is designed to cover just those specific high costs. Each one handles a specific risk, and you only pay for the protection you actually need. So at this point, you might be thinking, okay, this separate and conquer thing sounds good, but is it really a good fit for my financial situation? And that's a great question. It's not for everybody, but it's incredibly powerful for certain people. This strategy is going to be ideal for you if you're a retiree who wants guaranteed income, but you still need your other money to grow. It's perfect if you're an investor who wants transparency and control, and you hate hidden fees. It's also great for high-income folks who have already maxed out their 401ks and need efficient ways to cover risks. Basically, if you value clarity, control, and efficiency, this is for you. So, after all that, what's the single most important idea to walk away with? It really comes down to keeping things simple and keeping things separate. So here's the big takeaway. It's this simple. Let your investment accounts do their job, which is to grow your wealth with full access to the market. And let your insurance contracts do their job, which is to manage and protect against specific risks. You want both in your plan, for sure, but keep them in their own lanes. That's where you'll find the most power and efficiency. Now look, if this whole professional's toolkit idea makes sense to you, but you're not quite sure where to begin, that is perfectly okay. Here at The Annuity Expert, our entire job is to help people find the right tools for the right job, whether that's an annuity for income or the right kind of insurance for protection. We'd be happy to help you compare all your options, and our services are always completely free to you. You can give us a call at 770-755-1565 or just visit us online at annuityexpertadvice.com. We can help you build that right combination of tools to really secure your financial future.